The monetary and financial markets seem to be changing drastically after the pandemic curse to the Bitcoin bull run, as well as the rapid growth in the stock markets across the world after the long persistent lows they saw during the pandemic. But if you ask certain experts, they will tell you that we are yet to see the major crash on the markets of this decade. The one during the pandemic was big, but it was not the biggest that we are about to experience in the near future.
The point is, what are you waiting for? When the crisis comes, it's already too late. The market has gapped down. The gold's not available. The time to get it is when things were still relatively calm.
Amos Rickards explains this by referring to a term he used in one of his recent books called the Ice Nine. If you've read the book, named Cat's Cradle, that was written by author Kurt Vonnegut in the late 1960s during the Cold War, you would have read about an unusual isotope that he talked about in the dark comedy classic. The crazy physicist in the book had created an isotope of water which he called the Ice Nine. And what made the isotope special was the very different features it had as compared to the normal ice or water. The isotope basically remained frozen at room temperature, as opposed to ice that tends to melt. Plus, what made the isotope even more unique was the fact that it had the ability to turn any water molecules that came in contact with it into ice. That means if you put a drop of Ice Nine in a glass of water, it would instantly freeze. Now, it might seem like a harmless element, but if you really think about it, you'd realize that it actually is quite dangerous. Imagine if a vial of Ice Nine was poured into a lake or a stream. Not only the stream would freeze instantly, but also by natural contact, so would freeze all the rivers, seas, oceans, as we went further and further. Basically, all the water present in the world would end up frozen and unusable. The life on Earth would die, and we'd bring about the end of the history of life, at least for now. So, you see how Ice Nine was basically an element from the Doomsday Inventory? James Rickards found this concept interesting and tried to bring it up and adapt it into a financial and monetary market.
The stock market's crashing, the circuit breakers don't work, and they decide to close the stock market. Well, they can do that, but it doesn't alleviate the demand for liquidity. People will simply go over to the money market and say, well, fine, I'm redeeming my money market funds. So then you have to shut the money market funds, and then it goes over to the banking system, and people queue up at the banks and just try to take all the money out of the banks, and then you have to shut the bank.
He explained that when governments and authorities say that they want to close a particular part of the capital markets, they're actually inviting a self-created overall downfall. How? Well, for example, if due to disorderly trading, the government of some country one day decides to close down the stock market to stop it from crashing, it would hardly alleviate the demand for liquidity from the investors. Instead, they would want to wait out the low in the stocks and shift it to the money market, saying that they want to liquidate their money market funds and assets to meet their current cash demands. Then, due to too much liquidation, you would further have to close down the money markets, preventing them to liquidate and in need of cash, which would then shift them to the banking system, thus having people lined up outside banks wanting to take out money from their bank accounts to meet demand, which would force them to close down all the banks as well.
There's a kind of financial contagion to go along with our viral contagion that we're facing now, where every time you close something, the pressure goes to another venue and then it has to be closed. And eventually you end up shutting down all the markets, banks, stock exchanges, etc. in the world, at least temporarily, until you come up with some kind of solution. So that was the idea.
This will continue until the entire economy has come to a standstill and cause chaos and panic in the country, or even the world, as we are always interconnected effects of the economic changes of one country on another. You would then be running into a sort of financial contagion simply because of the fact that when you close down one avenue of the market, you would not suppress the pressure but simply shift it to another venue, pulling it under stress as well. You would end up closing markets, banks, stock exchanges, etc., possibly the entire world, at least for some time, until someone could come and fix the original problem where it started, or build a solution that could dissipate the pressure and fulfill the liquidation demands of the people.
Gold is going to go much higher and stocks are going to go much lower. And even though we've had some of that adjustment, it's not by any means done. So yeah, leaning forward a little bit and seeing what's going to come next. Unfortunately, these complex systems have a way of crashing into each other.
Today, Ice Nine has become a commonly used jargon to explain the domino effect of shutting down capital markets. The book Road to Ruin launched in 2016 and has become a popular go-to for people to understand the Ice Nine phenomena and learn about its effect in the context of capital markets and the world economy. But not everybody is in agreement. Many people say that this condition or situation of closing down a certain market would never happen, but history proves them wrong. It has indeed happened a ton of times in the last century alone.
And so all these things have happened before. They happen under duress, under stress, but the idea that, that would never happen is not true. And then all I've done is take that a step further and say, yeah, and it can be worse than that because they can be kind of closed down sequentially, at least until monetary authorities come up with a solution. So we're seeing the very early stages of that.
Some examples would be the closing of the New York Stock Exchange from August 1914 to December 1914 at the beginning of the world was one. The shutting down of all the banks in the United States by Franklin Roosevelt in 1933, which opened up only after 8 days, having taken what people popularly call a banking holiday. Shutting down all the banks in Cyprus by official orders in 2013, closing all the banks in Greece in 2015, which even forced people from Athens to fly to Frankfurt outside the country to come back with bags full of money because they could not withdraw in the country itself, and made more instances where many shutdowns were made by order under stressful financial or monetary conditions. So there is in fact a 100% chance of it happening again in the future, which could be even worse than anything that has ever happened before, considering the fact that economies are now much more interconnected. And if you are to believe James's word, we are already witnessing the beginning of this massive crash. There have been recent trading halts in the New York Stock Exchange in the form of temporary circuit breakers. Many banks across the world have been closing down temporarily or permanently under stress, and many other similar instances. Even in Europe, the same thing can be witnessed, which would resemble more as a depression rather than a recession, such as the Great Depression, where the main stock market index fell by a whopping 90%. Today, the stock markets are down 30%, which is bad enough, making people worried about where their money would come from, but it is nothing compared to what happened in 1929. Which is a possibility for the future as well.
My example is always March 2011, the Fukushima disaster in Japan. You had an earthquake that turned into a tsunami, that turned into a nuclear meltdown at a power plant, that turned into a stock market crash. So you had 4 separate systems, seismology, hydrology, radioactivity, and capital markets, normally independent.
Buying stocks at this point would be a bad idea because according to some, this downfall in the markets is just the first wave of the repricing, with a whole lot more to come. The markets are backed up and no one knows the exact date of when it might happen or where it might start. But you still have time to pull money back from the capital markets and put them into something more secure that would not be affected highly by the crash, such as gold, which is in fact becoming more and more scarce in the current date. It's better to act while things are relatively calm instead of panicking when the chaos hits. The complex systems are eventually going to crash together and bring a collective standstill to the economies and bringing a lot of uncertainty to both the general public as well as the commercial sector. The question is, how long will you wait before you decide to make the move?